We're always told there's no such thing as passive income when it comes to property investing, right? Okay, so the rent's coming in and you're making money while you sleep, so to speak, but there are so many things on a day-to-day basis, such as maintenance, speaking to your property manager, dealing with complaints from your tenants, that really don't actually make it a true passive income. What if I told you this didn't actually need to be the case and there was actually a way that you could make your property investment properties as passive as you possibly can? Imagine taking your property and renting it to an organization who would fill that property for you for a guaranteed rent for 5 to 10 years. Sounds like a unicorn deal, right? Imagine all the free time that you'd have. You'd be able to potentially go back to work and not have to worry about taking an extra lunch break because you've got to deal with complaints from your tenants or have to speak to your property manager. Maybe you could even take a sabbatical from work and go and travel around the world like you've always thought you wanted to do. Or maybe even just go and take a little bit of R&R and go on a nice beach holiday with the family and enjoy yourself without worrying about that phone ringing every single minute of every single day. Sounds pretty good, right? Well, you can actually rent your property to an organization that will fill a property for you for an extended period of time. And on this video, I'm going to show you how. Well, guys, this dream could actually become a reality. Many of my clients actually rent their properties to local housing associations, councils, organisations such as Serco, social housing providers that will take your property off your hands for an extended period of time. In some instances, up to 10 years. They will guarantee your rent for that period of time, and you effectively don't need to do anything apart from file your tax return maybe once a year with your accountant. But apart from that, that property is essentially passive income. Sounds interesting? Well, stick around, because on this video, I'm going to go through the process with you of how you actually find these organizations, and then of course, how you need to change your mortgage to ensure that it is the correct product for renting your property out in this particular way. But before we get into it, if you wouldn't mind hitting that like button, it really helps me grow the channel. And if you haven't already, make sure to subscribe to my channel. I'm posting new videos every single week. In fact, sometimes 2 or 3 times a week. So I'm certain that there's going to be a ton of new videos coming up that are going to really be of interest to you, as this one hopefully is too. So let's get back to talking about how you can rent your property out to a social housing provider on a long lease, on a guaranteed income, and effectively make a passive income for yourself. Well, first and foremost, you've actually got to know where to go to try and find these organizations. And in effect, there's kind of 2 ways of doing this. First and foremost, you can actually look up on the government social housing provider register, a local social housing provider that's registered near you that you can reach out to, contact, and find out the process of renting your property through their organisation. Alternatively, there's actually a national social housing organisation known as Serco, S-E-R-C-O, that you can go onto their website and you can actually check on their postcode checker whether or not the property that you currently own could be rented out through them in a very, very similar way. These organisations are crying out for property at the moment, so you might be surprised how quickly they come back to you. To help you out, I'll actually stick a link in the description to the government social housing provider register and also for Serco, so you can have a look at this straight away. An extra add-on to renting your properties out via these types of organisations is generally they're actually going to fill your property with multiple individuals, not necessarily one family unit. And as a result, they could potentially give you the kinds of rents that you would achieve if you actually rented your property out as an HMO, a house of multiple occupancy. So not only does this become a great passive income source, but in addition, you could actually end up earning yourself more income via the rent. Well, I know what you're thinking. Sam, this all sounds too good to be true. Well, there is a little bit of a drawback that we haven't really discussed yet. Yes, you've guessed it, mortgage lenders. As a mortgage broker, I know as well as anyone how difficult mortgage lenders can be if you're looking to do something that's slightly outside of the norm. And by norm, in this instance, I mean a standard AST, Assured Short Hold Tenancy Agreement, generally on a 12-month lease with a 6-month break clause. Anything outside of this, and lenders get very, very scared. Believe me, as someone that deals with these kinds of transactions on almost a weekly basis, I am doing all that I can at the moment to try and speak to as many lenders to get them to understand that these particular types of leases really aren't anything to worry about. Bear with me, guys. It's quite a long list. It's taken me a while. I will get there in the end. So what happens if you do speak to one of these social housing providers like Serco and they agree to take your property off your hands? Well, you've got to notify your mortgage lender. And generally speaking, if you actually speak to your existing mortgage lender, they might actually, amazingly, give you consent initially to do this. However, when you come to the end of your fixed rate, you do need to be mindful that you won't just be able to do something like a product transfer with this particular lender, because at that point, you will be outside of their particular policy if they don't lend on these types of leases. So whether it's immediately or at the end of your current fixed rate, you are going to have to refinance to a lender that will be comfortable with these types of leases. And stick around, because I'm going to talk you through now the kinds of things that lenders want to see on these leases, and I'm going to talk you through the criteria and policy that we need to adhere to in order to get these loans. So first and foremost, we need to think about how lenders view these types of leases. Now, if we're getting an HMO or a buy-to-let or even service accommodation or holiday lets, these are actually mortgage products, okay? So if you're going to rent a property on a short lease to on service accommodation via Airbnb or something like that, you would actually have to take out a short-term mortgage or a holiday let mortgage or a service accommodation mortgage. To be honest, lenders haven't figured out what to call it yet, but it's a product type. Now, the difference between that and renting your property to a social housing provider is that this is a criteria point, not a product. There are no such things as social housing mortgages. So the first thing we've actually got to figure out is, what product do we actually apply for? Now, as I said earlier on, these social housing providers are probably going to fill these properties with individuals. Now, as much as, because they are social housing providers, they don't require to get a license or a registration to rent these properties out effectively as HMOs, your lender will still see them that way. By the way, guys, as a little side note, these social housing providers can actually fill these properties with individuals without a HMO license, even in an Article 4 area. So your mortgage provider is going to see these properties as HMOs, which means we now have to apply for an HMO mortgage, which brings me to my next point, talking about policy. We have to fit within the lender's HMO policy, not their standard buy-to-let policy. Now, generally speaking, we need to just fit two criteria points here. One is the maximum number of bedrooms that they will be happy with, and two, experience. Now, as much as in recent years, lenders have actually become a little bit more lenient on the experience that they require their borrowers to have as landlords before they can apply for an HMO mortgage, the lenders that tend to be more comfortable lending to social housing provider leases still want to see quite a decent amount of experience. Generally speaking, we're talking 2 years worth of landlord experience, and we're not talking historic, we're talking right now. So before we even get into looking at the lease, we need to make sure that we adhere to those criteria points from the lender, namely the maximum number of bedrooms and your experience as a landlord. Some of these lenders may also have minimum income requirements, but generally speaking, if you can prove that you earn over 15 grand a year, we should be okay. So let's say we tick all the boxes for an HMO mortgage. What next? Well, the next thing is the lease, okay? Now, traditionally, when we arranged a lease over an extended number of years, we had to use a commercial lender. Yes, commercial lenders are a ton more expensive, but in more recent years, some of the residential market have actually entered the fray. However, being residential lenders, they're a little bit more inflexible than their commercial counterparts, and so we do have to adhere to some strict criteria when it comes to the lease. Now, the good thing here is that my experience of working with the likes of Serco is if there are things that need to be changed in the lease, we can actually contact them, and as long as they're reasonable, they will make the relevant changes for us. The three main things that lenders want to see in the lease is A, that there is a break clause at some point within the first 12 months. This is mainly so that if they do need to repossess the property for any particular reason, I mean, it's guaranteed rent, and if you're renting it to Serco, they're a massive organisation, so you'd like to think there is a very low chance of that happening. But if they did, they could actually take that property back nice and quickly because they could affect the break clause, and they can sell that property on to make sure that they get their loan paid back. The other is that most lenders don't like the term subletting. Now, effectively, they're not actually subletting this property. They are filling the property with people, but they, the organisation, are the tenant. They're not subletting it to other private tenants. So lenders don't like the use of the term sublet in a lease. So if we can avoid having that in there, that's a real bonus. And the last and most important point, to be honest with you, that lenders are really keen on when it comes to these social housing leases is actually the length of the lease themselves. Traditionally, Serco will offer a lease of 7 plus 3 years, i.e. 7 years plus the option for 3 more, taking us to 10 years. Commercial lenders are very comfortable with this, but lenders in the residential space aren't. Generally, the maximum lease length that we can go to is 5 years. But again, as I said earlier, if you contact these social housing providers and ask them to max out the lease at 5 years and send you a draft copy, then we can use that. So we've covered off the HMO mortgage policy. We've covered off what has to happen in the lease. How do we actually go about applying for these loans? Now, generally we go straight in for a decision in principle, but when we're renting our properties to social housing providers, there is an extra stage that we need to do first. Every single time that we look to apply to a lender for a mortgage, when the property is being rented out to a social housing provider, we need to get the lease signed off by the lender's legal team before we progress any further. Now, we could just go down the standard route, do a decision in principle, convert that to a full mortgage application, send over all of our documents to do the standard due diligence, get a valuation instructed, pay for that. But what happens if there's something in the lease that the underwriter doesn't like? By then it's too late. Potentially you've paid an application fee, potentially you've paid for a valuation fee, and that money you may not get back if the case is declined because they don't like something in the lease that your social housing provider is unwilling to move on. So to be safe, we always get it signed off first, and we'll get something in writing to say they are comfortable with the lease that we have provided, that we can then send in with our application to the underwriter so they know that this has already been signed off. And in any case, in many instances, these legal teams may even come back and let us know about something in the lease they're not comfortable with. That means we can actually go off and get that changed before we submit an application, which is going to save us a lot of time in the long run. And of course, if it's something that your social housing provider is not willing to change, then we've saved ourselves some time and money by not applying with that particular lender. So there you have it, guys. Passive income is possible in the world of property investing. Sort of. Well, I think this is the closest to it. If you've got any questions concerning how these mortgages are put together, how to contact these social housing providers, or anything that I've discussed in this video, please stick a comment down below and I will come back to your question. I promise I answer every single question that is put on these videos. Thanks again for sticking around to the end of the video, guys. If you haven't already, please like the video. As I said before, it really helps me grow my channel. And if you haven't already, please do subscribe to my channel and hit the notification bell. You'll be told every single time I release a new video. And as I said, I'm sticking these up 2, 3, sometimes even 4 times a week. So there's going to be plenty of value coming your way. And I guarantee you, subscribing to the channel is going to be well worth it. Thanks a lot, guys. I'll see you on the next video.